Welcome back to Unlimited Capital on the Best Ever CRE Network. I'm your host, Richard McGurr. When someone consistently raises millions in capital from family offices and private equity groups, you have to pay attention to how they do it. That's exactly what we're doing today with Luis Green from Arbit Capital Partners. Most people see the end results of successful capital raising, the big checks, the funded deals, and the impressive numbers. But today, Luis is taking us behind the scenes to reveal his entire systematic approach to institutional capital raising. So this is for those of you out here who are looking to raise like $20 million in a project, $50 million in a project, or more. You know, the point where like you need the big money, you need the institutional capital raising. So he's going to share his entire process from how he organizes his database, the tools he uses to go out and find the family offices and other institutions that are allocating to his strategy, who would be a good fit for the types of projects he's raising for. Then he walks us through how he reaches out to those people. He uses a combination of cold email, cold calling, how he gets past the gatekeepers, talks to the decision makers, and then starts to form a relationship. And that's the key, is how do you go from cold outreach to creating a relationship and then getting these people to invest, $5 million checks, $10 million checks into your deal. He shared his entire playbook today, A to Z. I mean, I'm tempted right now to start reaching out to family offices. We talked about that after the show. I was like, man, I'm a retail guy, but you have me very tempted to go out there and start a family office line. So, I mean, this was just a great episode. If you're ready to learn what world-class institutional capital raising actually looks like from someone who's doing it at the highest level, let's start the show. Hey, Luis, welcome to the show.
Hey, what's up, Richard?
I'm doing good, man. How are you?
Man, I'm doing great. It's been a fantastic day. It's sunny out here in Florida, so can't complain about any of it.
Oh, I love it. So yeah, let's get right into it. So Luis, you have a fascinating background. You spent a decade as an e-commerce executive before moving into real estate. Most people don't make that jump successfully. So what was the catalyst for that?
Yeah, great question. Before we start, I just want to say thanks, Richard, for having me on the show. How exciting! Listen to a couple of your podcasts, and man, what you guys are doing in the real estate space and the investor space, I think is just phenomenal. So, just genuinely honored to be on the show.
Honored to have you as a guest, sir.
So, as far as the catalyst on what was the jump, really. Interesting enough, as they seem really different, right? So a lot of times when you think about more of a tech, right? Like e-commerce seems more techy, and then real estate's obviously more fundamental. They seem like different verticals, but when you get down to the heart of it, and I wouldn't have realized this, I really would not have figured this out unless I had done both. The core of both of those businesses is actually the same, right? So when you're looking at a property, right? So let's say you're looking at a property, you're seeing who's your competitors, what's the market say it goes for, who wants to buy it, so on and so forth, right? It's no different than the analytics and data that goes into e-commerce, right? You're looking at your product. If you're going to create something that's a little bit different, let's say, for example, a private label product, you're going to add value in some way, shape, or form. Right. Then what's your new price point? It's kind of like a renovation or value add in the real estate project. And then who's your consumer and who's the product, competitors. It's very similar, actually. It was really, really neat. The verbiage is different and the numbers are just bigger on the real estate side than they were individually on, you're going deeper, in other words, when you go into real estate.
I think that's fascinating what you just said. It was kind of an unexpected answer, but it totally makes sense, because you're right that e-commerce is such a data-driven business model, incredibly data-driven business model, all spreadsheets, all competitor analysis, finding your niche, everything like that. And you're right, that's basically how to pick a good property. And there's a lot more in common than I would have expected with that answer. I think that was a great answer.
Oh, thanks. Yeah.
So what role do you play in your firm? Are you you do the deals and the capital raising, or?
Yeah, so I do both. So it's really me, my brother, and my cousin, actually. And the way it actually worked out originally is, so I started the e-commerce company. By year 2.5, almost 3, it was like sustainable. We had just launched into Mexico and Canada, and everything felt peachy keen, and had cash flow problems early on, like most people that are in business. Figured that out, and my little brother, who's not really that little, if anybody ever sees him, if he listens to this, you're not that little anymore. And my cousin both had actually started about the same time that I started my e-commerce company, just doing fix and flips with this company called Home Adopters in San Diego. So they had started partnered up. My brother did all of the projects, kind of like we'll call it what now is a chief liaison between the executive team and the guys on the ground. But back then he was just ripping out carpet. And
Mhm.
my cousin was sourcing all of the deals because he had an extensive background in mortgages. So he knew a lot about like refinances. He knew about property value, stuff like that. And so by year 3 of my e-commerce company, they're about 3 years in to Home Adopters. That's what it was called. And they asked if I would invest a little bit of money into one of the projects. And at this point, I was sustainable. I wasn't crying in the shower, trying to make payroll. And so I put a little bit of money that we had, and it worked. And then it worked again and again and again. And then when I transitioned from e-commerce and I put all of my eggs in a different basket, if you will, or into a new basket, it's when I bought in to be a partner in Arbit Group, which is the real estate development company that it has now become as the chief growth officer. And my brother's the chief liaison. And then my cousin is, the executive officer of the company. And from there, we spun off, Arbit Capital Partners, which is I'm the partner, sole partner in that, which is all of the capital division. It was just kind of like my bread and butter, something I really enjoyed. And so that's
Mhm.
where it all kind of falls into place.
No, that makes a lot of sense. So, what drove the decision to put the Capital Group into its own division?
So, realistically, there's a couple different decisions. So when we started, like, let's say, for example, we started like with the feeder fund, right? So I started with the feeder fund, and that was really, I'm part of this, um, mastermind group called the Family Office Club. It's comprised of millionaires and centimillionaires, billionaires, and it's just a bunch of guys that invest a lot of capital that moves around there, and really just having good mentorship that said, hey, like, you want to be able to move it into different vehicles without niching yourself into one particular thing. So if you start a capital division
Mhm.
of a company that has, um, the ability to move into other spaces, like for example, we have over 3,000 artwork pieces of artwork, um, ranging from sushi, Balenciaga. I mean, it just goes on and on and on. So, but what it did is allowed us to diversify a little bit. So it wasn't so deep in one pot. Um, and even though up to this point, we've never lost on any project. Our average IRR is 37% in the last
Wow.
over half a decade. So, I mean, we've really found a really good niche. But like I said, it just gave us the ability for me to be able to put capital in other places as well, and to be able to manage those relationships from a structural standpoint, independently from managing them on the developer side or the GP side.
Mhm.
It just made more sense structurally.
That makes I think that's brilliant. And so I've only been on the feeder fund, or call it capital side. Like,
Hmm.
we've never vertically integrated, though, of course,
Hmm.
my thesis is that at the time and place of our choosing, we will vertically integrate. But
Hmm.
I've always thought from the other side of the coin that, like, if you are the vertically integrated GP and like you're doing development projects, that
Hmm.
I've always felt it was smart to also be able to offer like feeder funds or SPVs or fund of funds, because it's
Hmm.
like, yeah, you spent all this time cultivating an investor base. You clearly
Hmm.
have a core skill of raising money. And the thing is that your investors, like, I don't think that you're losing money by offering other opportunities, because any sophisticated LP, which I think everybody I've talked to, nobody ever says I have dumb LPs. Like everybody has sophisticated LPs. They're not going to over allocate to your one strategy, like, or you as an operator, so that if you can offer them, like, let's say a debt fund, or like, I think Art, that's a great idea. Like you'll get more money from them. And also when it's through a feeder fund, you get to retain control of the relationships, is like, you're not like Koji Ping with someone and now suddenly you gave away your investor list. I would say I've done a Koji B deal once, and then my investors are like, hey, how come I'm receiving information about this other deal? And I was like, yeah. So anyways, that makes a lot of sense. And I think that that's a strategy that I think a lot of people who are, if you're listening to this show and you are vertically integrated, like, you should look heavily at, like, there's probably room for an SPV arm of your company.
Because I'm not, like, my role as far as Arbic Group isn't independent, right? Like, I'm still part of that company. It really does allow me full visibility. So when we do decide to go from the feeder fund and go towards, like, let's say those projects, which is our primary option normally. But let's say that for the moment where, let's say that we don't have something in the pipeline that fits a specific investor's appetite, right? My desire is always to capture the investor and to nurture that and place it into somewhere that makes a lot of sense, especially because for us, deal flow is never really an issue. Part of the group that I'm in, there's always deal flow coming in. So there's always somewhere that we can really allocate to without, like I said, or like you said, actually, without losing that investor relationship, and really maintaining the framework to ensure that, you really are on top of managing the funds, right? Being able to get those reports, getting analytical data, being able to voice to your investors what's going on, and having one person, which most GPs really like that. They'd rather communicate with one person than communicate with, $51 million investors. They're like, oh no, I'd rather just talk to one guy. And then that guy who has the systems can really, deliver good communication as they see fit to their investor bases, because they know them.
Yeah. I mean, I think that I'm not sure if I've said this on this show before, but I always view that there's like two types of people in real estate. There are deal guys who are obsessed with deals and they love doing deals, and we cannot exist without them. But for them, like, LP capital, generally speaking, is just something they need to do more deals. And so it's so nice to find a partner, like you said, where it's like, yeah, we'll handle like the 40 investors we brought into this deal for you. And they're like, oh, that sounds amazing. Thank you. Because I don't want to grow like a giant IR team. I don't want to be fielding a bunch of 60 people asking, where's my K1? Types of stuff.
My God, that's funny.
Yeah, especially because if you are a professional, then that means that, like, or you could say, like, when you make this your role, you can be a lot more proactive and provide a better experience to the LPs. I think that's the other side of this, is that, like, if you're completely focused on the LPs, then, you're on top of it with fund updates. You're on top of it being proactive with FAQs and, like, hey, not everybody does every month's update, but you're like, here's the status of your K1s in case you wanted to know. I know you're all asking, and let's get ahead of that. But another thing that I wanted to ask you about is, like, I view one of the jobs as a fund of funds manager is like putting together a product suite, and I think that you kind of got into that a little bit with your answer. Is what drives your decisions to, I mean, obviously let's put to the side that it's a good deal. Cause, like, obviously it's gotta be a good deal. That's kind of a given.
Prerequisite.
Well, and that's a given. You're never going to offer a deal that's not a bad deal.
Right.
But, like, how do you choose which opportunities you bring to market then?
So, and first, fantastic question, because I think when I first started in the industry, I did think it was all just about the deal. Like, oh man, this is this great opportunity, right? Best deal in America. The IRRs are huge. The timeframes are just so consolidated. The risk is so avert. And I thought that that's what made it. And I think anybody who is starting, any of the listeners right now, they might think the same thing. And I would challenge that perspective, that at the reality of the core of how we operate in our funds, they're relationship based, like truly relationship based. And for me, that happened organically because what happened is I was a business guy before, right? So everybody around me also happened to just be in business because they understood the struggle of when I said, no, man, I can't do this because I got to make payroll. I'm stressing out. They understood that it's not that I was a crappy business owner. It's that that's just part of being an entrepreneur. So as I won in business, they also were winning at different time frames later after that in business as well. So these natural organic relationships that I had with my friends, they also said, hey, like I really would like to be part of what you're doing. Dude, tell me more about it. And even though real estate wasn't something that they were specifically, well versed in as far as investing, because they've been investing in themselves for the last decade.
Mm-hmm.
One thing that the relationship did is it built trust. They said, okay, Luis understands what this means. So I know that he's going to nurture this to grow it the same way he's grown his own businesses, the same way that he's advised on some of their businesses. So I would say that the real key in this is really relationships. I mean, I hear it over and over and over, and our family office mastermind group, they talk about it a lot too. But if you really get down to the heart, there's the money. That's a given. Someone has to have money to invest, just the same way there has to be a good deal. What's going to move the needle for you is, do they trust you?
Mm-hmm.
And if they don't trust you, you're going to get a lot of, let's say, for example, you're going to get a lot of objections that say, okay, send me your pitch deck. Okay, well, I'm not really sure if these numbers are really right here on this pro forma. They seem a little steep, or, oh, your time frames are off. So you're going to start hearing a lot of these objections like, oh, you know what? Let me think about it. Let me ask my wife about it. Let me ask my tax strategist about this, blah, 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 blah. Someone is going to have to do something else. But when they trust you, at the end of the day, they're going to say, send me that stuff, because they're going to do the due diligence either way. The most sophisticated investors anyways aren't even doing it themselves. There's someone else that's doing the due diligence. But what gives you access to truly get the deal done is that, I'd say that investment that you nurtured that we call trust.
What's your funnel look like? And I'll get more at what I'm looking at. So do you have like a small group of people that you're raising large amounts of money from each? Or do you have more of like a full blown, like, here's how I acquire new relationships, here how I nurture the relationships, and here's how I close them? What's that look like for you?
Yeah. So we have a couple of different strategies that we do. The organic one is the one that we just kind of talked about, right? Which would be more for, like, let's say, the friends and family type funds, right? So those are kind of more exclusive deals that don't go out to everybody. They don't get pitched everywhere. They're just really exclusive, friends and family. So those are organic, but I do manage them in a CRM the same way I manage other relationships. So we use Zoho. If you're starting out and you're new, I would say maybe something simple like Monday.com, or if you're really getting sophisticated, there's some other softwares that are specifically based for investors, but we'll get into the weeds. But I manage them all in a CRM anyways, just because I forget stuff, right? Like, I want to make sure documents are placed in the right spot. I want to make sure that what I said is, especially when you're talking to a lot of people, can I get an amen from anybody out there who's ever said something and then they said it back to you? Like, I don't remember saying that. So
yeah.
ensuring that what you said is what they heard, and what you heard is what you said. So ensuring that that's on there. And then there's, like, let's say the bigger funds that we're putting together right now. So, we're doing a larger fund for a condo conversion. So that's a $50 million raise. And it really is really, really neat. It's opportunistic. It's almost kind of like a value add type feel. I'll sell myself on it if I keep talking. So, like, for those, we gather leads. We use Peer, P-E-R-E. It's beautiful. It's a really great website. Yeah, it's a great website.
Yeah.
It has an annual subscription. You pay for it, and we use it a lot for like market data. So we love getting like new updates and stuff like that. Like where's money really moving? But with that, you also have the
Well,
ability.
could you just explain what that, because I know what that is, but I think it's a pretty sophisticated database. Could you just explain what PER
Yeah.
is?
Okay. So PERE, what it is, well, it has a couple different functionalities. So let's say for my cousin Arturo, who is more of like the deal guy, right? It has tons of really good sources just to kind of stay informed on like what the market's doing, big hitters where they're moving money, stuff like that. From a capital raiser standpoint, it gives you a lot of that same fundamentals of understanding like capital. So you can talk about like what Caliper is doing with their funds, like where's stuff going. But it also gives you the ability to actually extract or export all of the major funds that are moving. We're talking about family offices. We're talking about huge funds, people that are just allocating, investors, and we literally pull off all those Rolodex specifically. You can filter it. You can say, hey, my deals are opportunistic in nature, value add for, let's say you're first time guy, first time raising big capital. You could go first time raise and it'll literally extract all these people that have spoke about it, talked about it, or that they're currently allocating to things similar to yours. That way, when you do reach out, it's not a guessing game of, hey, what type of investments do you like to allocate to? Like, are you guys currently open to this process? It literally, you have the data, and then we grab that and we import that all. So let's say, for example, just last week we imported 5,237 leads, right?
Mhm.
And then those are more like drip campaigns, call, and then you got to nurture it still. I mean, it's still relationship based, but it gives you the right people. Gives you their contact, email, the whole shebang.
That is super cool. I've helped someone put together an RIA strategy, and it was very similar. Like because
Uh,
you can buy these various databases, and they will segment like crazy. You
mm-hmm,
know,
mm-hmm,
you do not want to be blasting like, oh yeah, we got 120,000 RIAs in this database. You're not going to be calling 120,000 people. You're way better off cementing down to like, for example, what we did was people in our own city. Like in this
mm-hmm,
case, we wanted a list of people in Denver or Dallas because that's where
mm-hmm,
like we had a presence on the ground. Because that way, when we
mm-hmm.
reach out, we can say, "Hey, we're based here too,"
Yeah.
and have the high relevance in the outbound. Like,
Mm-hmm,
what does the rest of that process look like? So once you have your segmented list, where do you
mm-hmm.
go from there?
So I'm pretty, into guerrilla marketing, we'll say. I like sometimes
Yeah.
unconventional things. So I'll give you an example of some stuff that's really, really worked out well for us. So we'll start off with an email. All right. So as soon as it comes in, it's an email and it's all automated. Um, the one thing that you want to make sure with these emails is you don't blast everybody because if it has to be really like back to back. So we'll send an email that says, Richard, call you later today. And then,
That's a great subject line.
yeah, Richard, call you later today. Cause everyone's like, who's this?
Yeah.
You
Who are
know?
you? What is this?
Yeah.
Yeah.
So that's like the tagline. And then in the body, um, it'll say like a particular time frame. Hey, it's going to be around so, but if I get caught up, you know how it is sometimes it'll be a little later. So now they're like, this guy acts like he
Who?
knows me. We're talking like buddies. Who the freak who's Lou? Right? So yeah. So, so then what happens is I can see when they open it because in
Yep.
the CRM, it'll show that it opened. As soon as it opens, it pops me into a call to call them because I know they're on the computer. So I'm not wasting time wondering, or they're on their phone, right? So one or the other. So calls and then I'm like, hey, Richard, it's Lou. And he's like, uh, I'm like, oh, you got my email, right? Or let's say, for example, there's a gatekeeper, which is probably
Yep.
most of the time. So let's say I'll call, I'm like, let's say you're Sandy and I'm looking for Richard. Ring a ring. Hello, this is Sandy with Richard Incorporation. How can I help you? Hey, Sandy, can you shoot me over to Richard? He's expecting my call. And they're like, oh, you said he's expecting your call? Yep. We're communicating on email. He's expecting my call. Okay. So now she's calling, switching over. She's going to verify. Hey, Richard, there's some guy, Lou, that said you guys are like communicating and you're expecting his call. This guy's now like jacked up in his brain wondering who the freak is this Lou? And
Yeah.
so he's going to take it 100% going to take the call. Right. So that's kind of how like we get like that initial contact. We've done some other stuff too, like with some like really big players, like family offices that are kind of more like, they're harder to get to. Like we'll literally find out addresses. We'll find out because a lot of times these guys don't have like a physical location, right? That's like listed somewhere. We'll literally send them like a tree. Like I remember literally we started sending like these little trees and it'd have one little thing hanging that says, Lou, I'll call you later to grow a relationship. And at this point, they're like wondering like, well, who is this? Right. So it's just like little stuff like that. It's just, for me, it's about being creative. And it probably comes from my e-commerce background where it's just like, I like being creative. I like doing something that's like out of the ordinary. And so once it goes into that pipeline, then you're really just like nurturing, right? Like you get to talk to them and then we say, hey, you know, like I know that this may not even be the right time, but I did see that you guys I did see that you guys currently allocated to blank, blank, blank. And I read your article that you guys published about how you guys are really looking into innovation currently in opportunistic natures for condos, right? Or you guys do a lot of value add, which I think is incredible. What if I gave you 2 shots on goal? And what I mean by that is what if we had something that gave us opportunity for a resale that's going to give larger returns at a shorter time frame. And at worst case scenario, we could still implement what you're currently implementing as a second case study for a value add. And like, okay, now they're curious, like, like, but you know what? Like, obviously I'm just talking a lot. Let me just send you our case study. And if you like it, then great. And if you don't, I mean, we'll still be friends. And I'm sure that at some point in time, we'll do business together. But at the end of the day, like, I just want to make sure that what we're doing aligns with your investment thesis. And
So
people love it.
Do you try to then book a follow-up call on that call?
Nah. Nope.
No, you just send it and then you'll follow up later?
Yeah. I'll send it because at the end of the day, for me, what I realize what works best for me is really being relational. So, and I've done sales my whole life. Like honestly, like my entire life, I've done sales and, I've done them both. I've done like high pressure, like I've done kind of more pushing the needle, like trying to get them on a follow up right then and there. Hey, I know you're not busy. Like let's get on with so and so. But what I found, what I have found works best in this tier of business has been you chase me and give them the little, I give them the nuggy nugs. That's what we call it here as our team. Give them the nugget and then take them down a racetrack, which is a sales term, right? Where now they're really intrigued and they see like, okay, I see a lot of value, but like really, what is this? If I try to sell everything to them right there, one, they probably don't care. They don't know you. They don't trust you. And for me, when my official email goes out, it has everything. That first email doesn't have much, right? Doesn't have my website, doesn't have everything. It's just a blank thing with my name and like, who is this? The next one that goes out, they agree. Oh yeah, send me the information. They may just want to get me off the phone. But when they agreed as, yes, send it to me. Now that automatically gives me the ability to reach out again organically. Like, all right, yes, great. So, and if it goes really, really well, I'll be like, hey man, like, I'm not going to lie. Like, it was kind of a pain getting to you. You got your gatekeepers. You got all these people. I was like, let's just make this simple. I'm going to send you a text. I'm on WhatsApp. Do you have WhatsApp? And 90% of them have WhatsApp. They're like, yeah, wild, right? You would have never thought about this. Yep. No. Let me get you on, dude. I'll just add you on WhatsApp. And I promise you, bro, if it doesn't work out, I'm not going to bother you. And then they'll be like, Oh, so what's your number? And then they just give it to you. It's really that simple. And then I hit them with the WhatsApp. Hey, bro, I only do voice memos, by the way. Relational, once again, right? They're hearing my voice. That way, when I call them, it doesn't sound foreign, right? Like, oh,
Yeah, yeah, yeah.
this guy's charismatic. He's fun. But then when we get that official meeting, it's 100% structure because I naturally am very fun. Like I really like joking. I like being fun. And anybody who's ever been in sales that is relational, they've been caught in that at one point or another where they were so friendly and relational, but they just couldn't freaking close a deal because they just couldn't get it down the line. So implementing extreme structure during extreme moments that really are allocated for that. Like, for example, when we do our first official meeting talking about the pitch, right? Or talk about the performance, there is no fun. I don't even say, hey, what's up, bro? Which is normally my go-to when someone calls me. I'm like, hey, bro, what's up, man? How are you? I'm from California originally. They love it, man. Long hair, like this, it all fits. But we're in the middle of a meeting. It's all business because they need to know that at the end of the day, this is important to us both. And then when we're not talking about that, we can be friends again. So that's how we kind of get them down the line.
Yeah, I what's funny is another thing that we have on the show, we also call nuggets. And our nuggets are our like, hey, here's your actionable marketing takeaway for the show. This is your marketing nugget. So
Yeah.
I think that we just hit your marketing nugget, which was that once you actually get the investor on the phone for your first quote unquote real meeting, having a structure there and a script is
hmm
a must have. It's an
hmm
absolute must have. So like, what does that script look like for you? Just, I mean, you can put it very broad.
hmm Yeah. So it's really opening up with who you are. But I think that we get so consumed saying who we are at the front end that we miss really what matters to them is that you understand them.
Yes.
So we'll do our research and we'll kind of say, hey, so this is how we came to believe that this would be a good fit or how we call our industry. You think there'll be synergy here? So we go in, we give an outline of the research that we've done on them. Hey, we saw that you invested in this type of thing and publicly this is what kind of happened and we wanted to do this. Or let's say they invested and there's a big fail, right? Saying, hey, like, I know you might be a little gun shy right now because you guys just had this big loss. So you're probably really cross-referencing all of your investment and maybe even being gun shy on, new investments at the moment with new partners. But one thing that I think that's exactly why I reached out to you because I know what we're offering is going to help your strategy and then confirm what is their strategy. So you're assuming the strategy and then you're confirming and
Mm-hmm.
give them room to confirm. Be like, don't get so stuck on them having to agree with being aligned with what you're offering. Just understand what is it that they really need. What are they looking for? That's their pain point.
The way you typically do this is you give the explanation and then you just pause and wait. And then they start
Yeah.
talking.
Let them talk. 100. Yeah. We've all heard this before. The person who speaks the most is the one that lost.
Yeah.
And in a conversation, let's say when I'm talking to them offline, just talking to them one on one, I'll give you an example. Between me and you, right? The person that was hosted always leaves thinking, man, that was the best conversation ever. But what you realize, the person who said that is the person who spoke the most. Now, it's probably in
Mm-hmm.
your character to receive information and to really nurture that and to like move into different spaces. But realistically, most people, they like to hear themselves talk. They want to know that what they say is important and is validated. So
Mm-hmm.
validating those things. And then when they share something that's truly like, let's say, for example, like, hey, this is our thesis and this is why we care about that. Acknowledge it, right? It's just being slow. It's being more present and saying, you know what? Like, Richard, I really appreciate you sharing that with me. Cause realistically, sometimes people are really, nervous to really allow people to understand what their pain points are. They're apprehensive. Nobody wants to be exploited. And my
Mm-hmm.
goal is really just to see if this works, if this is a good fit. And if it is a good fit, like I really do think that everyone's going to win in this process. And then they're like, I totally agree. because there's always been an investor, a fun guy who's been exploited, who lost. Always.
Mm-hmm.
So once you get into that, then I go into, well, here, I'll share with you, we have a ton of different deals, and it's okay to pivot too, by the way. Like if originally I was talking about condo conversions, I was like, you know what, Richard, like I had this whole thing that I want to talk to you about condo conversions because it's really like what we're focusing on right now, but it's not going to be a good fit. So if it's okay with you, I have something else I think is going to be a far better fit for what your investment thesis is at the moment. And they're going to be super stoked that you're not trying to sell them into something. And if you have nothing, by the way, literally say, man, I wish I had what you're looking for. We currently don't, but, and at this point, like you'd probably know, but let's say the off chance that you said something and they said something like, you know what, right now we're so gun shy. We just lost $870 million and we're only allocating to the big players that we're already have relationships with. And, for the remainder of this quarter, we're not allocating anything into new relationships or whatever, that's totally okay, but let me understand what you're looking for. That way, when you have it, especially for like
Mm-hmm.
our business model, we're super opportunistic. So we get very creative with what we find, and they always work really well.
Everything you just told me, it's because I study sales in a lot of different places. And
Mm-hmm.
it's good sales is good sales regardless of the industry. Because like what you just told me could have been like a software as a service sales call, where it's like you do not tell the customer what their problem is. Do not tell them what their priorities are. Your goal there is to get them to tell you their priorities in a way that matches to what your solution is. So that like, you're not saying, oh, you need this. Like, hey, you're looking for really short, project durations. You want them to explain their strategy because that makes it so you develop, cognitive dissonance, where it's like people want to be consistent. They have a drive to be internally consistent, so that if you get them to tell you that we invest in projects like X, Y, and Z and operators like X, Y, and Z, especially if they tell you that before your presentation, that makes it so that when you do present the product, you're like, it checks this box that you said you needed, it checks this box you said you needed, and it checks this box. And so it's just fascinating. I love sales, obviously, as well.
Oh, me too.
I'm not the sales guy in my, yeah. But yeah, it's listening, discovery, and then getting the customer to tell you what they want to buy and tell you, I want to buy this.
Yeah. And getting them emotionally involved. And that's probably more of a challenge in, let's say, our industry specifically, right? When you're raising capital, most of the people that we speak to are not emotional. They actually try to distance themselves from all emotion that has to do with deals, right? They just try to get down to the nitty gritty, giving the numbers. Sometimes some investors, if you start giving them like the big visionary play and like they trying to pull the emotions, they actually back up and like, dude, like this guy's way too emotional for me. Like you lost me. Right. But one thing that I like to think about is don't try to get them emotionally invested in the project. Have them be emotionally invested in themselves. And what I mean by that is extract who they are. And this is where relationship comes in, right? For me, it's pretty simple. I have 4 kiddos, we travel a lot. A lot of the same things that they have are things that I have. So talking about that, oh, do you have any kiddos? That always opens up like, oh yeah, I got 2. And for me, I genuinely care. Don't ask questions that you don't care about. I'm like, do you have any kids? You're like, yeah, I got 3. Oh, that's nice. So then, you got to be able to sit in that moment because those are things that they really care about. Oh, that's awesome. Like, what are their ages? And at first everyone thinks it's like, well, I just asked you about my kids. Who cares? But then when you're really invested, like, oh my gosh, dude, like I got 4 same ages as yours, actually. So 10 or 9, 7, 5, and 3. So, just like you said, your son's name is Jason. Yeah, Jason. Oh, cool. Like, is he doing his sports? My son does football. And all of a sudden there's like these connecting points and you're having a conversation that they would have outside of work, that they'd have maybe at a football practice or some random guy that the wife just introduced them to. You're getting them into the mix of, okay, I'm giving you information about myself that I don't tell everybody about, which builds trust. And then once they know that you have similar characteristics and frameworks in your life as they do in theirs, they see similarities, and people buy and people trust people that remind them of themselves. If you can't make it simple, 2 reasons people like you and two reasons people don't. People like you, or you like people, because they remind you of yourself in some way, shape, or form. Or they have characteristics and attributes that you wish you possessed as well. Reasons people don't like you. They don't remind you of yourself, your characteristics, personality, traits, and they do not have characteristics that you would like to possess yourself. It's simple. So if you want someone to connect with you, remember, it's not about being bigger than them, because most of these guys are bigger than us, right? With the capital that they have is far greater than, and we are the ones that are looking for it, right? So really it's the next connection point. Since I may not have characteristics that they want, not yet, then I have to meet them I remind them of themselves in some way, shape, or form, right? And then after that, once they trust you, then the second piece comes in where you'll be able to be yourself a little bit more. Like for me, I'm really charismatic, right? My tonality, how I talk, what I like to talk about, it's really, really deep, and I'm fun. And eventually what these people will do, who are normally very A-type, they'll start to see me because like, oh, he does have A-type characteristics. Reminds me of me in some ways. But man, he has that one thing that I've always wished I had. I wish I was more of an extrovert. I wish I was more fun in business. And all of a sudden you're hitting them with both pieces. And that's what keeps a long-term investor with you.
Yeah. I think a lot of this, like you said, is you have to expose the surface area of your personality and who you are as an individual, because like you said, people will subconsciously then try and connect with you and relate with you. The guy who talks about this a lot is like Russell Brunson, and like the way he learned about it is that he was like formerly a college wrestler, and he would know that like after his presentation, a couple of wrestlers would come up to him, except how many people are like wrestlers in your average kind of person? Not many. And so then what you have to start doing is this. I'm talking about your top of funnel, by the way. So like your social media personality, everything like that. Like, that's why some people are like, why am I posting about my whole life online? Like, it's nobody's business. No, it's actually incredibly important, is because you are probably a complex person who has lots of varied interests. Like I love to bike. I love to ski, I love marketing. You have to talk about all that because people are going to latch on to one of those aspects of your personality. And then that's your hook.
Very true. And I mean, even to validate that point, on my LinkedIn, the post that does the best are the ones with my kids. I have a picture of me and my 4 little kiddos out at the beach, and we're all just kind of taking, like that iconic family shot. That's the one that did the best. It's not the one that gave like really good, like analytics and data on like what the market's doing. That's, to me, I'm like, this is so valuable. This will make you rich. It wasn't that. And everyone on LinkedIn's business. What people liked the most and had the most engagement one was the one that had my kids.
Yeah. Yeah. I mean, that's just like good marketing. It's, I have a friend I went to high school with who's like a very successful financial advisor guy. And you can tell he has a very deliberate strategy, because the same posts that get the most engagement are his posts about skiing and his posts about his kids. And it's because like, if I'm scrolling LinkedIn, and I'm in Denver, so like that'll explain. I'm a big skier, obviously.
Yeah.
When I'm scrolling down and he's like twice a month posting him skiing, and then he usually has his kid next to him. And then I stop there because it's like business post. And I'm like, oh, guy with skis. Love it.
This is different. Yeah.
Yeah. I mean, and like as a financial advisor, I mean, sorry, how should I put this? Skiing is generally viewed as an upper income sport type of a thing. And so there's a very good chance that any client he's connected with, like skiing, very common,
It's like polo in the Hamptons.
Yeah, exactly. Yeah, precisely.
Yeah,
Man.
that's so true.
So
That's so good.
yeah. So if you think, I mean, we're getting to the point where we're wrapping up. So like if someone was listening to this, you know, we went through a lot of
Hmm.
stuff, mostly focusing on which I think was great, really good sales. On other episodes, we've talked a lot about marketing, but you know, where the rubber meets
Hmm.
the road is these conversations. Like nobody's going
Hmm.
to hand you, you know, $100,000 or $5 million just with posts. Like you got to get on the phone with them and you have to
Hmm.
build rapport, get trust, and close. So if
Hmm.
someone was listening to this, what do you think the biggest takeaway was, and that what could they implement like today to improve, you know, their situation or how they're going about
Hmm.
raising capital?
Yeah, I'd break this up into two questions if that's okay. So one is for the novel person that's having a hard time really raising their first round of capital of any amount, right? Whether it's like a little syndication of like 10, $50,000, 100,000, or if you're putting together something a little more extensive, right? Just maybe like that beginner, you're having a hard time getting to that beginner phase. It's being willing to learn what you don't understand. Because if someone isn't giving you, if if checks aren't being struck, or if let's be real, if wires aren't being made, if wires aren't being made and contracts aren't signed, something is missing. So being truly intentional and finding like what is missing, like what am I not doing right? Because at the end of the day, there is something missing if you're not able to raise capital. And normally it has to do with, are you being authentic? Right? People can see through people that are inauthentic really quick. And as soon as one piece seems off key, it's like, oh my gosh, yeah, like I love traveling. Like, oh, where'd you go? Oh, well, it's been like, like 7 years, but I went to like Utah and, so, right? Like be genuine because those moments, like if someone's like, hey, like I was like, man, I love to travel. When's the last time you went? Oh, dude, I was living in the Hamptons. It was beautiful. I was at this resort, blah, 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 right? And so one, being genuine, which I think honestly, if I'm being really transparent, was the hardest because I didn't want to seem small. It was my fear that people would see me as less than. Oh, if they think I'm nobody, they're not going to want to invest with me. They're not going to want to give me their capital. But just remember, they were where you're at some point in time in life. And that reminds them of themselves. So that would be one. So if you're having a hard time raising capital, just really come down to yourself. Like, am I being genuine? And do I understand what I'm actually doing? Knowledge and authenticity. Two, if you're pretty seasoned and you've been raising capital, I'd say ensure you have good systems, right? Because if you have good systems, it allows for scalability. And if you have scalability and the systems are really, really tight, it really allows for you to have more happiness and peace. So for me, that was something that was really big because, I got stuck working, in all of my ventures. I've started what, 6 companies now? You know, I've I've taken so much time, energy, and effort, and at the sacrifice of peace. So, but once I really started understanding how the formula worked, structure and systems gave me so much peace.
I think even what you just said there was a great example of finding common ground with someone, because obviously I'm an entrepreneur too, and you're like, I started all these businesses and it was incredibly stressful, and I was like,
Yeah, ain't that the
yeah,
truth?
yeah, tell me about it. Like, yeah. So, oh man, that was great. I mean, you hit me with that so hard. I was like, immediately, like, even gasped. I was like, it's hard and it's
It's
stressful.
hard.
Yeah. So, Lou, where can people find you more? Where can they follow up with you?
Yeah. First, if you love the content, I would say before you come find me, I'd say definitely listen to more of Richard's content, because it's nothing spectacular about anything that I've done or said. It's really how he was able to navigate the conversation. So keep listening to his content. Get to the next podcast.
Every
Um,
Monday on Best Ever
every
CRE.
Monday. Come on. And if after that you still feel just tugged, whether it's something genuine like, hey, I want to ask him a question or just connect because you found some common ground in something that I said. Definitely find me on LinkedIn. I don't have any other social medias. I don't have any. I don't have any Instagram. I don't have Facebook, but LinkedIn, you can find me, and it's as simple as shooting me an easy message. I respond to everything that comes in. Well, me or somebody on my team, but either way, uh, if I'm in town, I travel a lot. I'm bicoastal, so I'm in Florida, New York,
Mhm.
and San Diego, and Texas quite often. So if you live somewhere around there and you really connected with anything I said, I'd love to get time. Just say, hey, I'd love to get lunch, breakfast, dinner. I eat all three meals like most people in the world. And I drink coffee. So if you do any of those four, I'm sure we can find time to meet.
Awesome, man. And I would extend an invitation to you if you ever make it out to the Rocky Mountains. Would love to go skiing with you.
Oh, come
Say that.
on. Is this for real? Did we just become
Yeah,
best
yeah,
friends,
yeah.
Richard?
Oh, dude, I love
Bro,
it.
what is going
That's
on?
like that's our corporate DNA, actually. Like we kind of made that intentional, is that all three partners ski, which is not surprising. We're in Colorado, but we're like, yeah, we love
Yeah.
skiing, man. And like, I'm going to be at Best Ever next year,
Yeah.
in Salt Lake City. There will be a ski trip involved. That goes out to anyone else
Oh,
on the show. If you want to come earlier or later, come skiing.
dude,
So
I think what we
yeah,
just did
Luis.
is we just created a big traveling group for Salt Lake City 2027, 2026, bro.
Yeah, yeah, it's happening. Real estate ski trip. All right, everybody. Thank you for coming on Unlimited Capital. Luis, it was great. See you later.
Take care, guys.